Alrighty, so I think it's 12:32. So without further ado, let's get started. So first off, thank you very much for taking your time to join my webinar today. I really appreciate you guys taking 30 minutes out of your busy schedule to be here with me. Without further ado, let's get started. If we haven't met, allow me 15 seconds to very briefly introduce myself. My name is Kailu. I'm the principal broker of Pulsar Enterprises. We are a mortgage brokerage that focuses on helping real estate investors finance and refinance your first to fifth rental property to eventually help you build up a portfolio so you can use it to get an early retirement or to use it to get more lifestyle options. So you guys are here because you likely are a successful realtor. So one of the common challenges for successful and incorporated realtors is that when you make $300,000 commission paid to the PREC, you're not going to take everything back out on your personal side, because if you do, you now will have to pay a lot of personal tax. So let's say you're going just to declare $30,000 as your personal income. So when it comes to the time for you to go to the banks trying to qualify for a mortgage to get a primary residence or get a few rental properties, have you ever wondered how you can use the $300,000 commission you made rather than the $30,000 income you declared? Because the $300,000 commission, that's your real earning potential. The $30,000, that's only a fraction of what you earned. So the good news here today is that there are both short-term and long-term lending solutions available to help you. The most popular program for incorporated realtors is called stated income. So with this program, we can actually use your business income to help you qualify. So let's say with your PREC, you made about $300,000 commission, hourly consulting, whatever you count as income. But let's say $300,000 for gross income, and you expense about $40,000. Now you still have $260 left, right? Now on your personal side, you declare only $30,000. Now with this program, we can use the $260 as your income rather than the $30,000 income on your personal side, because we get to state how much income you're making. Now with this much income of $260,000, I think it's pretty safe and pretty easy that you can qualify for these $1 million plus mortgages that will allow you to buy a really nice permanent residence, or you can use that to buy a lot of rental properties, of course, if you have the down payment ready. And another good news here is that this program is not only available for you as a realtor, it's also available for your clients, such as IT consultants, restaurant owners, truck and business owners. Basically, whoever's running a profitable business can actually leverage this program and get a large mortgage based on their business income. And also, to share a little secret with you, this is also how a lot of successful entrepreneurs pay very little personal tax, and at the same time, they buy really nice properties. So just sharing a little secret to help you with that. So there are also a few niche solutions available, for example, commission growth up, but this is only available for people who are sole proprietorship. So that means your business has to be under your personal name. And for example, if you are making $80,000 commission for this year, we can gross that up by another 15%. So on your application, we're going to say you're making $92,000. This is actually allowed by the lenders, and therefore the name commission grows up. Alternatively, you can also use high net worth programs, but most of these high net worth programs will require you to have $250,000 in cash after the down payment if it's a purchase. And also, so the banks can give you an additional mortgage on the one-on-one basis. So what does that mean? For example, if you qualify for $600,000 and you have another $250 in your bank account after the down payment, then the banks will consider giving you another $250 mortgage. So in total, you are possibly looking at $850. So the $250 is on a one-on-one basis. So overall, stated income is still so far the most popular program for incorporated realtors. Now, one thing I do want to mention up front is that stated income programs are provided by B lenders. So 20% of the down payment is mandatory. And also, I want to take this opportunity to demystify B lenders, because there are a lot of misunderstanding people have about this type of lending institutions, and also lending products. So when you talk to self-employed people, sometimes you will hear them saying that my bank told me I don't qualify for a regular mortgage because now I'm self-employed and I only show $30,000 income. You will also hear some people saying that I hear from other people that I can only get a high interest private mortgage. And some of them will complain about their accountants too, messing up their tax returns, making them no longer qualify for the mortgage they wanted. But the good news here is these situations can all be fixed. There are solutions available for all these type of people. And matter of fact, the reality here is that Stats Canada estimated there are about 2.9 million Canadians that are actually self-employed. That counts for about 15% of the total workforce. So there are a lot of options for you when you're self-employed. All you need is some mortgage planning. And I will show you how to plan everything later. So if we are talking about A lenders and B lenders, A lenders being the major banks such as TD, Scotia, and the B lenders being Home Trust, Equitable Bank, Haven Tree Bank, banks like that. Do you know how these lenders will look at the borrower's income? Do you know how they calculate the borrower's income? Well, for A lenders, it's pretty straightforward. Even for self-employed people, they would just treat self-employed just like employed, and they will use the income from the tax returns. The advantage of borrowing money from the A lenders is that you will get a cheaper rate as compared to other type of lending products. With B lenders, they have multiple ways to calculate income. So they can see things from different perspectives, basically. So for example, we can use your financial statement if you run an incorporated business to help you determine how much income we can actually use. We can also use a 6-month bank statement to calculate income. So if you are making good income within this 6 months, but you don't think you're gonna be able to make this much for the next 6 months, that's okay. We can use this 6-month bank statements to help you qualify for the mortgage. And on the flip side though, the B lenders will charge you a higher interest rate and also lender fee, usually 1%, and also brokers, we will usually charge 1% as well. So all this being said, how will the numbers even look like in real life? So I want to take this opportunity to bring you a real life example and some numbers as well. So Joe and Jack, fake names, but real people. So these guys approached me in March 2021. Jack is a young electrician and Joe is a realtor with a PREC. So he actually has an incorporated realty business. Jack, the business is on his personal name, so he's a sole proprietorship. So both of them make about $200,000 gross income for the whole year. Jack really wants an A lender. So when he approached me, the past few years tax returns for him are weak. So we advised him that he needs to take about 2 years to show $150,000 personal income so he can qualify for the mortgages he wants with these A lenders. And Joe is okay with getting a B lender mortgage. So we recommended him to earn as much as possible and of course expense as little as possible for the next 6 months because we will use the net, which is the gross revenue minus the expenses to declare Joe's income. So now, because Jack has to file for $150,000 personal income to establish the qualifying strength, he now has to pay almost $45,000 to CRA because of his tax return. And Joe, he has no obligation to declare any personal income, but he ended up declaring about $30,000 salary. And the personal tax he has to pay, it's only $3,400. Jack has to pay almost 13 times what Joe has to pay to CRA. And another thing is it will take Jack 2 years to fully establish the qualifying strength, and Joe can start buying in 6 months. So remember these guys, they both approached me back in March 2021. So where are they now? Jack is still renting today in December 2022. And he's paying about $3,500 per month rent. And he has to do another tax return within a few months in 2023 and pay another $45,000 to the CRA. The A lender rates, the A lenders he really wanted are now charging right around 6% for their mortgages. Joe, on the other hand, he has completed the purchase in September 2021, and we helped them lock in a B lender mortgage at a fixed rate for 5 years at 3.2. So if you look at the numbers, it's actually scary, actually, in my opinion, to even look at these numbers, because for the same loan amount, both these guys want, let's say $600,000. Jack now will have to pay 6% on his A lender mortgages. The monthly payment's going to be $3,800. And the Joe, although he's with the B lender, but he's only paying 3.2 from a few years back. And back then rates were cheap, and now his monthly payment are only $2,900. So there's about a $900 difference there. And remember, Joe is with the B lender, but his monthly payment are way cheaper than Jack's. Another harsh reality for Jack is that how much have the housing prices increased in the last 2 years? Now, Jack, he not only his monthly mortgage payment will be way more expensive than it really should be, he now has also to get a larger down payment because of the market. The properties he was looking at were right around 700. Guess how much they are worth now? Easily 800s, right? So is it really worth it to take 2 years hoping to get a rate that's not even cheaper? Well, you tell me, right? From the numbers perspective, it doesn't make any sense. So I also have dealt with people and they really want the A lender for whatever reason. So I understand if they want to pay as little interest as possible, or they feel more comfortable with the banks they can see at every street corner. But if you really want an A lender, I can also show you what kind of saving you're looking at. So let's say, let's still use $600,000 for the mortgage amount as an example. And if you want to qualify for that here in Ontario in today's market, you pretty much have to declare about $120,000 for your personal income to qualify for that much. So as a self-employed business owner, you do have more flexibility on what kind of income and how you declare income rather than a employee. So you can, let's say you're gonna declare yourself $120,000 as a salary, then the tax you need to pay for that year, it's going to be right around $31,000. So alternatively, there's a cheap way to declare this much income. That will be doing a dividend of $120,000. So you can pay less tax, but still $14,000 for $120,000 dividend income. So so let's say on this $600,000 mortgage with A lenders, I did the slides back in November. I haven't changed it. So let's say the interest rate is still 5%, which is not really the case anymore. Right now, it's about 6%. So, but more of the story here is I'll show you the difference using the same numbers. So let's say the interest rate is 5%, and on the $600,000 mortgage with the interest rate of 5%, the total interest that you're going to pay over 25 years is going to be $446,000. That's with the A lender. Now, with the B lender, let's say the interest rate is going to be 6.5. So I did this number based on the fact that B lenders and A lenders, there's usually a 1.5% to 2% risk premium. So usually B lender mortgages are about 1.5% to 2% more expensive. So with the B lender, the interest that you're going to have to pay over 25 years is going to be $605,000. But remember what we discussed earlier with the B lender, you don't even have to declare any personal income. You can literally declare $0 personal income and pay $0 personal income, personal tax if you have no other obligations requiring you to declare any income. So if we look at all the numbers on a very exactive kind of view, then with A lenders, the total interest you're going to have to pay on the mortgage, assuming the rate will stay at 5% forever. So the interest you're going to pay for A lenders is going to be $446,000, and with the B lenders, it's going to be $605,000. With A lenders, it takes 2 years for you to establish the qualifying strength. So assuming you're going to do a dividend because that's cheaper, you still have to pay about $28,000. to get into the position to qualify with A lenders for 2 years, right? Because you have to do 120,000 dividend income for 2 years. The good news is there's no lender fee and there's no broker fee either. With the B lender, the lender will charge you 1% for the lender fee, and the broker we will charge you 1% as well. So in total, with the A lender, you're looking at $475,000, and with the B lender, you're looking at $617,000. So the gross total difference here is $142,000. So if you average that out, that is about $5,700 per month. It would be great if you, I mean, is that a lot? If that is not a lot, then that's great. If that is a lot for you, we do have some alternative solutions we can help you with. That is what we call the graduation programs. So what we have been advising clients to do is get into the market first, particularly when the market's when the prices are going up really fast. Then we would definitely recommend you to get in first with B lender, and then take 2 years to establish the qualifying strength and qualify with the A lender after 2 years. That's what we call a graduation program. So more of the story here is, if the market is really hot, then get in first and fix the problem later. So once again, if we are really looking at the pros and cons of the A lenders and B lenders, there you have A lenders offering you the cheapest rates, but it does take 2 years to establish the momentum and also the qualifying strength. With the B lender, you only need about 3 to 6 months to establish yourself to get into the position to qualify for a mortgage. So, oh, I'm sorry here. So now I think you have I'm sorry. Another thing I want to mention here is that B lenders, they also have a more relaxed debt servicing requirement. So for the same amount of income with the B lender, you can actually qualify for more. And also most of them, they're okay with bankruptcies and also consumer proposals. It's just that with B lenders, they will charge you a higher interest rate, a lender fee, and also a broker fee. So now I think you have a pretty good understanding of how the B lender mortgages can work for you. So if you ever need help, I hope it's going to be us helping with these mortgages. Here are 3 reasons why you should consider working with us. Number 1 is we have a communication commitment. So whenever you ask us a question, you will get answers from us within 1 business hour on any business day. We'll also provide you with milestone updates so you know how your file is progressing and exactly where you are going. Reason number 2 is we will underwrite your file upfront. That means we would rather spend some time and some money to really try to understand what you're trying to achieve, and really take some time to dig deep into your situation, trying to find some strength to help you get into that position. So number 3 is we offer you ongoing support. We do monitor the rate market very closely, and we'll implement creative strategies such as strategic early break from your current mortgage. Particularly when the rate is going up like today's, we'll break the mortgage and get you the cheapest penalty possible, locking a lower rate before the rate goes higher, because eventually you will have to renew at the current market rate. So we're going to do that, get you the cheapest penalty possible, locking a lower rate to eventually save you money. Our goal, our value proposition is always to help you make more money and save more money. So lastly, I want to show you a few reviews from my realtor partners, what they're saying about us. But I do want to be mindful of your time, so I'm not going to read through everything. Instead, I'll just pick a few keywords. So for example, Wasif is saying, Kai's commitment and dedication are outstanding, and you were pumped throughout the process. Response was quick. Gigi was saying that she appreciated my amazing communication, regular updates, and she enjoyed working with me. And you can also see Jess saying communication, good communication and very responsive, so on and so forth. All these reviews are still available on my Google review by real people. Go and check them out if you want to. So once again, there's no Q&A session for today. I do understand it's the holiday season, so probably you guys are really busy as well, but I am open for calls for next week. So after this webinar, you will get an email from me with the link, with my Calendly link. So if you have any questions, concerns, make sure to book me for a call. I look forward to chatting with you, getting to know you, and helping you in the best way I can. So once again, for taking your time to join me today, I hope you have an awesome day, and we'll talk soon. Thank you.